Hi, we all know that cash flow can be a huge challenge for small business. It's actually suffocating when you can't get on top of your cash flow. I've developed a really simple 3-step process. Lots of our clients use it and they really love it. I use this system myself in addition to other systems. Now, there are long ways to do cash flow management. They involve making budgets and reporting against that. I will do a future video to show you how to do that. But practically, I find that 95% of small businesses do not prepare a budget. And that makes it very difficult to manage the business and to manage cash flow. Today, I'm not going to go through that long system. I'm going to give you a really simple 3-step process that will help you keep on top of your cash flow. It will take you about 20 minutes to set up and honestly, a minute a day to look at one KPI. So we'll head over to the computer now and I'll take you through the system. So here we are, we're going to set up the 3 steps to set up your cash flow system. Now the first step, you will need 2 bank accounts. You may already have these open, but if you don't, make sure that you open 2 bank accounts for your business and in your business name. The first account will be your business operating account and the second one will be your tax account. Now you can log into your online banking and rename those accounts in the version that you see. The bank will set them up as they typically do, but in your online banking, you can actually give that like a favorite name. And I would recommend that you call it business operating and business tax account. Step 2 is I'd really like you to understand something really important. GST is not your money. If I could change that, I would. And I know it's really painful, but it's true. It is not your money. It belongs to the ATO. So if you're not registered for GST and you sell something for $1,000, the GST is 0 and you collect $1,000. Now, all of that $1,000 is yours. It's all yours. But if you are GST registered and you sell something for $1,000, you collect $100 in GST and the total that goes into your bank is $1,100. The $100 is not yours. It actually belongs to the ATO. Same goes for employee tax. Once the employee has worked for you and you've done the pay run, that pay-as-you-go withholding tax actually belongs to the ATO. Now you should always minimise your tax and GST. Talk to us about that, about the plan for doing that. But once you've done that, there's nothing more that you can do. So worrying about something that you can't change is a huge waste of your time. Once you accept that this money is not your money, managing your cash flow is going to become so much easier. Using someone else's money is never going to work as a long-term strategy. GST and the pay-as-you-go tax on wages is the ATO's money. Okay, next we're going to calculate your yearly BAS and IAS amounts. So the idea here is we're going to work out how much is in your operating account that should be out. It's not yours. We want to separate it and put it into the tax account. And this is how we're going to work it out. We're going to take your yearly amounts paid on BAS and IAS, and we're going to add up and get a total. Now, if some of your BAS are not typical, for example, you might have increased in turnover and your last 2 BASs are much higher than the first 2. I would adjust it so that your total is what you expect for your ongoing BAS as an annual figure. Now we're going to divide that by 52 to give us a weekly figure. The next thing, we're going to set up an automatic payment to transfer that figure from your operating account into your tax account. Believe me, it's more painful if you do this as a manual payment. It's much easier if you set it up as an auto payment. I actually quite like to see that happening on a Friday. Now, when it's BAS or IAS time, you just make your payments from the tax account. However, if you're on a payment plan with the ATO, pay those payment plan amounts from your operating account until you get caught up, and then you'll be able to pay your BAS as you're going straight from your tax account with a lot less stress because the funds will be there for you. Okay, the third step is We want to look at your working capital needs. Now, these are different for every business. A pretty straightforward calculation though. So I'll step you through the steps and you'll calculate these for your own business. Just stick with me. It is a calculation. It has a few steps. It is pretty simple. We're going to start with your profit and loss. This is a demo company that I'm using here, and it's best to use the accountant's prepared profit and loss if it's reasonably recent. The two figures that we're looking for here are the costs. This business has purchases in the cost of sales area of 6,895.23, and it has operating costs of 4,841.42. Now, some businesses won't have cost of sales, and that's perfectly normal, so don't be concerned. So we're going to add those two figures together, and that gives us $54,936.65. And that's your total cost for the year. But we want to take out depreciation and interest. So we're going to deduct $695, and we're also going to deduct $2,698.56. And that's going to give us an adjusted total of $51,543.09. So this figure is your total costs, less depreciation and less interest. So next we need to calculate your business loan repayments. You know the loans that you have. In this example business, they have only a car loan. It's $994.74, and that's $11,936.88 for the year. So we're going to add those two figures together, the adjusted costs and your loan payments, and this is the new figure of $63,479.90. Now we're going to divide that by 12 to give us the required minimum balance for your working capital. And in this instance, it's $5,290. Now, there are some theories that say that you should have 3 months or 6 months of costs in your account as working capital. But seriously, we really never see that with businesses. What I do see is those businesses that have this 1 month minimum balance in their account as working capital, those businesses don't struggle to pay their bills. So I would always recommend at least 1 month. And in this case, where we've done the calculation, it's $5,290. This is your most important KPI. It's your cash flow KPI, key performance indicator, and it's a really important figure. So the figure is really important, and the way to remember it easily is to jump into your online banking app and just record it against the description of the account. So you can see that here we've got a business operating account. Our magic number is 5,300, and we've put that in the description. So every time this business owner logs into their online banking, they can see that the minimum balance that is required in that account is 5,300, and today they've got 30,000, so they're looking pretty good. They can probably take a bonus, or they might even be able to do some capital expenditure, depending on their plans. This is just a nice, easy way for you to see that figure, to not have to remember what it was. So now you can easily check the most important cash flow KPI by checking your online banking very quickly, and you can just do that every day. If the amount in your bank account starts below that or regularly falls below that balance, your business needs some help. You really need to start to cut expenses and work on growing your income. If there are no expenses that you can cut, you may need to cut your wages. Initially, of course, the objective would always be to come back and recover that. But if you're taking more from your business than it's actually generating, you are doomed for disaster. You're not going to recover your cash flow management, and you're also going to have a business that is on the brink of disaster. So running a business isn't easy, and cash flow stress is absolutely horrible. But once you have a handle on it, it's like your head is above water and you can see the future and actually start moving forward. So please speak to us about your cash flow plans, because every business is different, and your business might have something that's a little bit different that makes your cash flow needs different. Of course, feel free to reach out on our website, and please click on the round logo to subscribe, and don't miss any of our updates.